All right, ladies and gentlemen, I hope you had a wonderful day. It was an absolute snoozer to start off the week. It could have started off crazy. It didn't. We had a couple of events in the morning, and it had a very weird effect. We're going to go over that, but with this week being all about the CPI, there is something bigger at play, and honestly, I think the whole world is watching, or at the very least, participating in this. So I got something good to show you. It was already relaxed. I mean, I'm telling you, today was so slow, even after a week of downgrades and all of that. But like, you had people already talking about the traders going to the Hamptons, even summertime and all of that. But a lot of the S&P, I believe 80% or so, has already reported. The markets are kind of calming down a little bit, and that's why we were saying don't panic just yet. So in my opinion, I think today was a little bit of stabilization. We are waiting for that data, but now we gotta watch the interest rate. So Chad, drop your thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. It is free 99. You got a chat room. You see all the plays live. We did a couple of plays today, and I do have 3 plays. We're gonna talk about that, but let's talk about the real quick thing about what happened. There's a couple of things that I can mention, but I'm going to keep it very simple. We opened up the morning with Fed comments. There was Mr. John Williams and Michelle Bowman. Did you see a reaction on the stock market? Not really, but if you look at the bond curve, remember that bear steepening and the curve steepening we've been talking about? You take a look. SHI is in the green. Go to TLT. That thing is down almost 1%. Go to the middle, IEF. You're going to see that that's like 0.25%. The whole entire curve was moving. The short end it was actually held up, yields lower. The long end went down. That is a steepener. Now, people are blaming the comments. Williams in the morning, he said, I don't think we need to raise rates too much. That helps the short end of the curve. And then Bowman says, I still think we got to raise more. The short end's already chilling. Remember, policy sensitive. Then the long end continues to react again like we were seeing. So you're watching those dynamics play out. Now, when we talk about what else happened today, you're going to see, but beyond that, there was only one other big thing, and it was Germany. And the Bank of Germany, they said, we're not going to pay interest on government bank accounts anymore. It's the simple story. There was, I think, over 50 billion or 500 billion. I'll have to double check, but they are going to stop paying interest on those accounts. So people had money in these bank accounts saying or getting or expecting that they were going to get interest, and all of a sudden overnight, they said, yeah, you get nothing on this. So what happens? Those people pull that money out, and they go find and buy things with yield. You saw a big reaction on the German bond yield. So that was really big, and I would even watch for that develop. It's kind of just another quick action by either a central bank or government related to interest rates, and that is very important. But those were the only other big things. There was something about like China, pharmaceutical crackdown on grifting. Didn't get much coverage, but if you go look at the China like pharmaceutical stocks, they dropped about 3% today in China. That was kind of a big deal there, but for the most part, China opened up good, and then we sold off, at least on the China stocks. But that is all we had here. You had a couple of earnings, like we said. We're going to get a couple of earnings in the morning. Most of the S&P is already reported, so we are good to go for the most part. There's still going to be like NVIDIA and a couple of others. Don't you worry. Again, Disney, there's still some names out there, but now, like we said, we're either waiting for the data, and it's either people will get volatile and panic before that or not. And actually, it reminds me, even then, there's more data in the morning that help people not panic. The Manheim used car index, that also came out in the morning, and that had a drop again, I think like 1.3%, but that flows into the whole disinflation theme and leading you up into the CPI on Thursday. So watch out for that data. But now, what is the whole world taking place in, and what do we got to watch? This is the main point of the video, at least for today, and I want you to see it because we are in a very, very unique scenario. I keep showing you the 10-year bond, and we keep talking about how, it's like a psychological level. This is a 10-year chart. You go back, rates are very, very high here, and we were saying what could even happen in the United States if rates go higher. I was even talking, I really think the danger zone is 4 or 5. I think even if we break from here, we could go go above there, but things really now, if you break out from here, I mean, back in the day, 4.5 to 5 was kind of the limit. So if we start breaching that again, I think that's like warning, flashing lights, but that's not even the point of what I'm here to show you today. The point is we keep looking at this 10-year, but if you notice, it's like you're getting actions. Germany today, we've gotten Bank of Japan just about 2 weeks ago. You're hearing from the ECB, the Bank of England, and there's like all these things going on, but like it's also moving slow. And that's what sucks about this situation, because I want to tell you, it's like we're waiting for something, but like deep down we already know. And what that is rates breaking out to a higher level. And what I'm trying to tell you is that it's just not the United States. And this is now like global. Like look around, and I just go through all of the bonds. So I clicked on every single one of these to show you, but it's like, yeah, United States is at a 10-year high, psychological level of 4, but what about Germany today? Again, this was climbing and reacting as well. They're at a 10-year high, but they're at like that 2.5, 2.6 level. This is the question, do they go to 2.75 at that top and then break out into 3? But like keep going down the list. United Kingdom, they already broke here from the 4.25 and 4, came back down, and now sure enough they're already at 4.5. And now the question is, do they go to 5 or does it go higher? But go through all of these bonds, like I'm saying, Japan, but this is happening now. These are all 10-year charts, but a lot of these major countries, all of the interest rates are doing this. So what I'm trying to tell you is like, wow, it's like we're waiting, and like I'm saying, it's not like we're waiting for anything to like happen, or maybe we are, or it's more so as if like we are all globally at once kind of stepping into an unknown territory, and it's kind of like baby steps. And I think that's why I'm saying watch the calendar, and it's either we freak out to one of these countries going gangbusters and something going crazy here. Again, there is other countries like Brazil, as when they started to break out, and maybe they had their breakouts earlier, you know, some places have already cut, but even like Russia, a lot of interest rates are higher. Some countries more so than not, depends on if they are developing or not, but a lot of these countries are here. So it's like, it's not just the United States. I think this is now something globally. It's either we gently work our way into this and these higher regimes without hurting anything, or borderline, this is the breaking point, or nobody moves until we hear from Powell or anything else. And that very well, you might just dance around here. That is borderline what you've done for the last 4 months. So I do not rule that out, but hopefully you see what I'm trying to tell you here is that, dude, this is a global situation. If you think it's now just about the 10-year breaking above 4 and some of these psychological levels that they haven't been at like 10, 15 years, I mean, you go through the major nations or the major bonds in places that do swaps, or people or countries people do swaps with, you're going to kind of notice a trend here, and this is everything to get a better idea of the picture. So I think we're all gently working towards that. It's either we find out this week before the data or after once again, and then we go from there. But like I'm saying, I mean, equities are doing their thing, but bond land is getting very, very interesting. So I hope you're ready for it. But now let us get into the plays. So right off the bat, I don't have any bond plays for you. Again, you got to be patient, be careful with the timing, and that's like the whole idea. Just understand some of it and how it's slow moving, but you got a little bit of time. And also too, the best part is if anything did happen immediately, you could always react the day of. So we've talked about that a little bit, but as far as the plays today, I got a couple of different ones. I have a couple of weird ones. I did this one right after the bell today. Hims, they had earnings, and I grabbed 1,000 shares at like $8.90. I was trying to get them at $8.70. Flipped out at $9.30, $9.33. I made like $400 on it, but I want to see if we could go for a double dip on this. And the reason why I bought it, this plays like a catch-22. So they are up a ton since the beginning of the year, even their last earnings in October. So that's like a whole nother 100% of risk borderline from that level, or 50% if you bought it here. So that's the downside. But the good side, they're down since their last earnings. It's about 30%. And then they came out today. They raised guidance by like 10, 15. It was a good report. They beat on the quarter. They guided up. I think it might be able to move around. I like the industry, you know, the medicine clothing. I think it could be a hype play more so than not, and we've seen a couple of these, but I'm already out of it. I'm going to be very, very judicial in terms of getting back in, and that'll determine if it like comes back to some of these opening prices, then I think that could be a good level, or pretty much where I traded it last. So going to be watching out for that. That is play number 1. Then play number 2. This one I'm excited about. And the beauty is we don't know what's going to happen. And you know I like this company. We got it in the long term. We've been up on it. Am I going to buy more if it goes up tomorrow or if it goes down? I don't know. My price is 7 handle. I will not buy MPW for the long term unless it says 7.99 or lower. That is what I would be looking for. So if earnings tomorrow are good, I am not going to buy more. If earnings tomorrow are bad and it goes to $8.50 or $9, I am not going to buy more. I am going to keep waiting. Now, here's the thing. The play tomorrow all depends on their earnings. I think this could be a squeeze play if they're good. However, their earnings will be very pivotal, and there's no guarantee that they will do good, and the same probability I could attribute to them, coming in with a blowout earnings, shocking the shorts and all of that, I would say is the same probability as them coming out and coming on some FSH. You know what I'm saying? Like, if they just start, you never know. But again, we've seen a lot in 2023. I like the company. I like the business. I do think it's a good value play. Again, that price, I'm telling you, indicates a very high yield and a very, very high value and protects you from further downside. That's why this was a value play that we went after. But what I'm trying to say here, tomorrow morning they report. If it's good, 20% of this stock is shorted. 70% is already owned by institutions. It even pays a high yield. If they could confirm a turnaround story, I think it's going to go crazy, and I'm going to look to make flip plays on it, and even with options. The problem that I have with it is that if it goes bad tomorrow, I also think it could die, and then we talked about it today, the options are all jacked up. So this thing could be volatile. Watch it tomorrow. I don't know shares or options yet, but play whichever way the earnings is. If it's a good earnings, it is going to run up and go crazy. If the earnings is bad, it is going to get clapped. If it's a good earnings and stock goes down, I would go for the bounce. So I think that could explain it very simply. I don't have any other shares except my long-term shares. No other options either, but this is definitely going to be on my radar for the morning. So that is play number 2. Just wait for the result and watch. That's the best part. And then finally, play number 3. I mean, come on, guys. You already know. Disney once again. So this one, we're like right at break even. Like, this is the price we said. It's been starting off in the morning. I think tomorrow, or I think we have till Wednesday. So pretty much 2 more days left to play on this one. It hasn't moved too much. I mean, if tomorrow's a bad day, it's either going to break through the lows or not. But like some of the other earnings, if this doesn't have a move tomorrow, I think literally the day of, like we've seen with like Netflix and Tesla, I think that will be it. And Tesla, their CFO is leaving. That was the bad news today. That was part of some of that. But those are the main plays. I do have one more bonus for you, actually, because we talked about this. You remember good old TDOC Leap? We were talking about the price we got it at. It was good. We bought a ton of them, made them free, got to make the whole entire play free. And I said, wait till it comes back to this price. Well, I bought in at $38. It's now like, what, 37 to 41. You could get in if you want, but now here's the dilemma. The stock is down, and this is what I was saying. You wait for these moments. It's like a little higher than not, but it depends. So you could scale in or not, but this is where you get in. So I'm not saying you buy in, but at least the premium comes down. So sometimes you may feel you missed it, but it's like usually at some point, either the play is going to fail, and that's why this dip isn't like a dip. It's going to die, or even if it is a big runner, sometimes there's these, a lot of times, almost every time, there's that opportunity to get it on the double dip, especially when there's a little bit of time. So I'll bring that to your attention. I'm still holding, 25 of these, but they're entirely free. So it's still worth like $1,000. Even if I sold that now, took my $1,000 at break even, it's like pure profit because we sold out the first set more than what we paid for the whole amount. So that's where I stand on it. But like I said, there's no point of FOMO and go for these ones at higher prices because sure enough, I mean, came right back down. I think we sold out like 80 or 90 or something like that. So nice play comes here. You could wait for it, but you could either give it some time or scale in. But a lot of people asked about it. There it is. You could see it. And that is pretty much it. As far as everything else, I'm still in the right age. We're up on that one. I don't know what else I took. Again, I'm still killed on that Doc N. Still got Baba shares, old Cody and box plays. Those are down like 40, 50 bucks a pop. Still in the end, that plays down 1,400 on the future. The 2 years down, but it's been down lower, has not gone anywhere there. And I think this week I might be ready to make an average down on either the yen or a bond play, either average on the 2 year, or we see if it makes sense to go for the 10-year and 30-year, but there's a lot more carnage around there, so we'll see. But just going to be waiting, riding it out. I still like the post-earnings and pre-earnings, and then see where the market takes us. So I hope you're ready, but that's your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember what you become is more important than what you get. Whether it's trading, a job, something you're going through, good or bad, what are you becoming? You got to ask yourself on this investment journey, what has it created and what are you becoming? Because that is what you will attract, not what you get, baby. Oh my gosh, you get different things, but what you become. So Chad, I hope you hear me, man, but I hope you're ready. I hope you're blessed too. Hope you keep some positivity, 10% in the long term, keep it on you, 10%. It's always good for you. But Chad, I love you. I will see you in the morning. That is everything. And that's it. I'm out. I'm not even that awkward. You know what I'm saying? Did I wear the bull shirt last time I hit up? You remember that one? I was like, so they don't know. It's only awkward if they don't know. If not, this one ain't even that awkward. I'll tell you. Yesterday I was singing. I was showing. I could do it. I'm gonna end it. I'm doing good. I think I did good. I made it. I made my hands on the button right now. I did good. Okay, bye, Horde.